All right, guys, thanks for coming today. This August meeting is always one of my favorites of the year. We're kind of getting into the home stretch of the growing season. We're getting some ideas in terms of crop potential out there, and then we get to discuss what the USDA thinks we have or don't have out there. With regard to old business, the only thing we've done since the last meeting a month ago is we did go ahead and get some SEP short-dated 360 corn puts on for about 4 cents on the day of the recommendation, which would have brought us to about 100% hedged on old crop corn, or excuse me, new crop corn. We also added a 10/20 September short-dated put for 7 cents, which brought us from 50 to 75% hedged. Obviously, those options expire August 22nd. We got to see yesterday's report. We get to see the better part of the month in terms of the important part in what rain we get to finish this crop out, and then we'll have to make a decision. To be honest with you, the day I bought them, I kind of hoped we'd walk away from them and they wouldn't do us any good. And as we'll talk here a little later in the meeting, that's more than likely going to be the case this year as we get over the next 10 days or so. Hog, guys, we haven't done anything extra since the last meeting, so we'll leave that as it is. The crux of today's meeting, obviously, is we want to talk about yesterday's reports, what they mean going forward, what they mean maybe just on their face. I warned, if you guys were following the newsletter, last week or so we talked a little bit about Informa put out a 168 yield. Most in the trade were playing a little bit of can you top this type 170, 172 type yields for U.S. corn yield. The problem is most of us that walk fields or go out there and estimate, we're trying to look at a final crop versus what maybe the USDA will say with their methodology. For example, for the August crop report, the USDA does not weigh ears. Obviously you cannot weigh an ear that's at the blister stage or the milk stage and get a real good feedback on that. So they went out and counted ears. And they did find record ear counts. And as we talk a little later in the meeting about my own observations so far, I concur with that. I also concur that we're not dealing with average ear size this year, and again, we'll talk about that later. But what it means is at a 167.5 yield, it came in a little bit below the average trade guess, which after the selling pressure we've seen over the last 5-6 weeks, one would think that you'd see the corn market rally pretty good. In fact, I think it was up 2 cents, maybe 3 at one, real quick. And you guys ought to have real-time quotes if you don't watch these crazy reports. You can't believe. I mean, you look away and you look back, and beans move 15 cents. It's just insane, but it is what it is, and we have to deal with it now. But shortly after the numbers were released, within seconds, they'd actually sold the market off again, which tells me that in terms of trade believability, I think most in the trade right now are in the mindset that big crops get bigger. And I would agree with that, the question being how much bigger. But if you're going to use a 167.4 yield, which is a new all-time record, and then the USDA also, somewhat surprisingly, largely offset that by increasing demand in the new crop. They also, I know it's getting late in the year, but they did increase demand in the old crop as well. So between the changes in additional new crop demand and less old crop going into the crop year, we basically came out almost unchanged at a 1.808 billion bushel corn carryout. If that is a corn carryout that we're going to live with, then 360, 370 corn's probably too cheap. If that number grows, which I'm going to make the case I believe that it will in the coming months, then we may have a little bit more downside left in the market, at least based off of this year's fundamentals. One thing that the USDA did bring up yesterday that might be out of our own backyard, there was some talk yesterday about some of the southern states, that some yields down there had been hit compared to a year ago. But in terms of corn production, you're talking about states that are 5% of U.S. total. So although some of those states are down, in the big picture, it isn't going to make a big deal on yield. The USDA did say in their, when they come out with their verbal or written, whatever you want to call it, to back up their numbers, that they were using, they did not use, the ear size they used was below that of 2009 and 2004. Now, those years, and if you want to throw 1994 in that hat as well, were years that saw yields exceed the old record by a substantial amount, in the neighborhood of 10+% over trend. They were also very cool years, if you remember, 94, 2004, and 2009. So I think one of the things going forward we're going to find out is the impact of, and we've had this discussion before, we've had it in dry, cool years where we're like, I haven't gotten much rain. I won a small wager with a customer one time whose yard was completely brown over around Marion, and this was in, was it 2009? Somewhere in there. And he didn't think his corn would make 165. It made 193 that year. Indianapolis had one day of 90 degrees that summer. Indianapolis this year has no days over at or above 90 degrees this summer. So if you're talking about making a corn crop, temperature, with the modern hybrid, I think temperature is at least as important as moisture. And we've had an exceedingly mild summer this year. So that's a very long-winded way of saying as we go forward, I think we're looking at bigger crops. Now, you can look at, people bring up statistics, and you know what statistics they say make a liar of you if you're not careful. We've had years in the past where we go raise the yield estimate from July to August. It's been kind of a crapshoot as to what final yield is. But again, the exceptions to those rules have come in those cool summer years, like 94, 2004, and the current record year of 2009, where we actually saw the crop grow from the August crop report into the final. So, based off yesterday's reaction from the traders, I think it's fair to say that I don't know if they did you guys a favor or not. If they'd have come out at 172 and people were convinced that that was pretty close, and then hit you in the knee for a day or two, that's how you make bottoms in the market, is when you get to the point where we're at where we're going to be, or even overstate where we're going to be. But when you're under like this, it opens up more questions than answers, and that's probably what we saw yesterday. I think the USDA said there's a good corn crop out there. How good it gets, give you an idea on ear size, and we'll talk about this a lot more when we start talking about what I've seen so far walking fields. But if you take an ear that's 5% bigger than the trend ear, okay, so and you equate that to yield. If you take a 160 for trend and you add 5% to that, 10% would be another 16 bushels, but 5% would put you half that, another 8 bushels over that. If they used an average ear, which is what they said they did in this survey, and you add 5% to that, you could be adding 8 bushels an acre to 167 up to 175. I'm not going to commit to 175, but it shows you the potential that's out there in terms of just a little bit bigger ear size. And I did see bigger ear size. So, I'm more in that camp still in about the 172 area, plus or minus a bushel or two for a final yield. How we finish would dictate the plus or the minus on that yield, but I'm certainly not satisfied that 167.4 is going to do it this year. And if you've been out in your own fields, no year's perfect, but by and large we've seen a pretty good growing season. Demand-wise, as I said, that it was kind of a wash. I have a problem with them raising the U.S. export total. There's going to be a tremendous amount of feed wheat out there this year. Brazil and Argentina still have a lot of corn to move. We're not the low price leader right now in terms of export available corn. As we'll talk about a little later in the meeting, we also have an elevation issue in terms of FOB capacity down at the Gulf and the PNW. That's going to make it difficult for us to ship corn. The ethanol number, raising that a little bit, I have no problem with that, although the ethanol guys tell me they are very close to capacity right now, both in terms of production, but more importantly in terms of logistics. How many cars they can get, how quickly they can move ethanol. So that number doesn't bother me. The feed number going up 50 domestically doesn't bother me. You know, we're certainly going to try to increase meat production. Starting to see it already a little bit from the poultry side. The initial signs are starting to show up, so I don't have a problem with that. But I do think going forward, you'll have difficulty adding more onto that demand side basis what you were given yesterday. So most or any more production increases will be hard to offset on the demand side and make them believable. You know, if we look at it right now, I think what yesterday did is it took the move straight down, you know, somewhere below 350 off the table for now. That doesn't mean we won't see that later on a higher yield or a logistical nightmare. You know, if we do have a logistical nightmare this fall. But for now, I think it's kind of taken off the table. Certainly taken off the table. My ultimate fear, I guess it's the low I fear, is in that 3.25 area on a futures basis. But you don't make bottoms until that big crop quits getting bigger. And it's going to take more than September's not going to do it. You're probably looking at an October, November report, and more likely November because of the state of the crop in terms of maturity right now, before you really get an idea of saying, okay, that's it. That's where the peak is in terms of production. So any questions just on with regard to yesterday's numbers, comments, concerns? Dave?
Yeah, Jim, was the certification of acres, the acres that were actually certified, figured into this yet?
No.
Or preventive planning,
No.
anything like that?
The question is did they use certified acres yesterday? And the answer is no. I don't think they used certified till October, I want to say, is the first time they'll use those. I could be wrong. It's either October or November before they'll use the certified acres. So, you know, could we see some acreage changes? Yes. Are they, you know, we go through this always after the March report. You know, people want to argue with the March figures. By and large, barring a real, you know, in 1993, you know, what was it, a couple years ago, we had a lot of problem getting the crop in the field. You don't see wild swings in the acres. And by then, we're so focused on production swings in terms of yield that, you know, is it a part of the equation? Yeah. Is it a headline? It probably isn't going to be. We also have to remember that we had a tremendous amount of prevent plant last year, and there are still acres out there that people think are kind of missing that got lost in the wash from this spring in terms of, you know, comparing normal prevent plant versus last year's 8.8 million acres of prevent plant, I think. So I don't see acreage changes being a market mover going forward. Will there be some minor adjustments? Probably. There always are. I don't think it's going to. I think by then we'll be so focused on the yield and on the demand side that it'll just be more of a minor thing than anything else. So
The reason I asked, it just seemed like, I mean, it's just windshield tour. It just seemed like forever where I drive, just beans just seem like they're everywhere.
well, we added what over 8 million acres of beans last year. So you're right. I mean that's, you know, ballparking, spitballing a day. That's 10%. And 10% move in 1 year in any swing is a huge swing. That's it. And we may see some more of that. You know, when you start looking as people start making planning decisions for next spring, and our friends down in South America make decisions right now in terms of profitability. Other questions about corn? As far as it pertains to yesterday's report, I want to save the yield talk a little more until later because we got a section where we're just going to talk yield. Okay. On the soybean side, first time in 10 years the trade has not overstated what the USDA will say in their August crop report. In other words, we have a tendency to overstate versus what the USDA does. Now, you can't blame the USDA for that. I don't know anybody who can actually go out there first week of August and tell you what a soybean yield is going to be. You know, it's way more art than science. You know, corn, you can go out there and scientifically use some methodology to get you close, but soybeans, I don't even try. You know, you look at you look at, you're one of the best looking crops I ever saw. First week of August was 2004 until the aphids got them. You know, and then when it was all said and done, we know how that turned out. So, so they came. The USDA did come in with a 45. What were we? 45.4 versus 45.2 the previous month. I think the average trade guess is 45.5. A record yield nonetheless. The fact that the USDA, you know, followed up on July's figure and actually raised a little bit, I think, made traders cautious yesterday. One of the reasons you saw selling in the bean market is, you know, there's always, with reports, there's always the trade guess, and then there's kind of the whisper number. And yesterday's whisper number was, you know, what if it's 44 something like Informa came out with. When we didn't get that, we got a negative reaction. I don't think it's something that's going to have a, and you're also seeing, with the exception of that northeastern quarter of Indiana, and even our local, we have 3/10 out of all this rain the last week, 10 days, we've had 3/10 and 3 rains. So there are some areas that are dry, but by and large, if you take the Midwest, you take the Delta, you take the Southeast, take the Northern Plains, everybody's done pretty well with moisture, and the sentiment out there is that's really, you know, a $1 million rain for soybeans. I would point out that each time the USDA has tried to raise their yield in August, the last 6 times, the final yield proved to be lower than the August estimate. My personal feeling is I think you're probably plus or minus half a bushel one way or the other in terms of where we're going to end up on soybean yields. And if I had to guess, I would probably be more towards the minus camp than the plus camp, just because soybeans, unlike corn, are not a cool weather crop. They're more of a warm weather crop. We've all heard the saying, beans don't like wet feed, and it was certainly wet early when you know, beans were emerging in their early growth. You know, we're susceptible, obviously, with this kind of weather to fungal diseases that could show up. With all that being said, let's not forget as well that, you know, from Pierre, South Dakota, down to Knoxville, Tennessee, and Arkansas, that whole area there has enjoyed, you know, you really haven't seen any stress on the crop, other than, if you want to call cool weather, stress. So I just don't see the yield changing a lot. Could it, if we ended up with widespread disease? Yeah, it could, and that's probably the biggest risk for the soybean market, would be a mold, sudden death type. And of course, we have some of that every year, but that would be one of the things we could see. And obviously, I'm a little more back and forth on this. The other thing you have to remember, you know, we grow a tremendous, about 23% of all the beans grown in the United States are grown south of the Ohio River and east of the Mississippi River, what I'd call the, you know, Delta Southeast area, compared to about 7% on corn. So that area has enjoyed some pretty doggone good conditions by and large for soybeans. So, you know, all in all, I think the USDA is in the ballpark. As long as that stays in the ballpark like that, you know, we're looking at USDA said 430 million bushel carryout if realized, versus 415 in July. That would be considerably higher than what we've seen over the past several years. I throw that caveat out there again that USDA has a strong track record of coming in early in the marketing year with higher ending stocks estimates and then kind of shaving them away as the year goes on. The biggest problem you're going to have this year is, you know, we're going to see more acres out of South America. There's no question about that. If this El Nino develops, now they're saying, well, now it looks like it might be on again. If it develops this fall, early winter for us, which would be spring, early summer for the southern hemisphere, does have a tendency to support good yields in Argentina and South Brazil. followed by what many believe to be another increase in U.S. soybean acreage this spring, tied to profitability concerns about corn. You know, we may just reach a point where, you know, you go back to back to back to back, you know, average or above soybean yields, counting the, you know, the two hemispheres, where we just can't use them that fast. We also have a little bit of a problem. We've seen, you know, DDG's value go from 125 to 130% value of corn down to as low as 65% of the value of corn in the Western Corn Belt here lately. So you're going to have that to compete against in terms of soybean meal usage. So I don't have a problem with anything USDA said on the soybean side yesterday. I thought it was very minor changes. The thing to take away going forward is, yes, the USDA is projecting higher stocks this year, which, you know, people say again, you know, how many times are we going to have them tell us that and then see them shave it away? But the odds of really shaving that this year are starting to dwindle just because of the production side overwhelming the demand side a little bit. I've seen estimates of, you know, global production increasing 16 million metric tons, and, you know, even if you project the demand and add another 2 or 3 to China, you're still looking at 10 to 12 million tons excess production over usage this year. So barring a you know, an unforeseen crop event down in South America, it would be hard pressed to see how we're going to come up with a, you know, a tight soybean carryout here in, you know, in the next 6 to 12 months. What I will tell you about soybeans that we need to be careful about is, versus corn, they're still well overvalued when you look at historical ratios. And I think we talk about that a little later. I might be getting ahead of myself, but you know, if you take $3.50 corn and you take it, you know, at the high end of the historical 2 to 2.5 to 1 soybean to corn ratio, you know, you're going to check in somewhere in that $8.75, $9 a bushel area for soybeans if corn's going to trade at $3.50. So, you know, when you're sitting here looking at $10.60, $10.50 soybeans, and you may not like that price, you have to understand that in ratio terms, you know, it's certainly better price than corn is. And in terms of profitability, you know, and risk in putting corn out versus beans, you know, there's a lot of incentive for producers to plant soybeans. I think anybody who plants, who has the ability, and really we're certainly a fringe area here compared to, say, south of the Ohio River. You know, when you start looking at July 15 wheat and no 15 soybeans, I can't see why anyone would plant corn down in that area. You know, because a wheat double crop bean plan would seem to be economically the best thing for them down there. So going forward, you know, I think you're going to see more bean acres. I think you're going to see fewer corn acres. I think the function of the market over the winter is going to be to discourage the soybean side and keep enough corn acres to keep people from just running away en masse. You know, when you look up areas like the Dakotas, you know, $1 to $1.25 basis is being advertised now for fall delivered corn. And you start taking that off 360 corn futures, I don't care what your rent is. You know, your variable costs become very difficult to plant corn up in that area. And we've seen tremendous growth since Freedom to Farm in 1996 up in that area. So, you know, I think you're going to see the market try to hold a bid under that 2015 corn bid crop, December corn. And I think you're going to see the no 15 narrow against that, you know, just to discourage people from going crazy on the soybean side. There's a difference, though, as we talk about, I'll be jumping the track here too fast. Let's stop there for a second and say soybean questions before we move on to talking about basis and some of those things.
What was the world numbers on corn, please?
Let's see. Corn carryout is projected for new crop at 187 point, I don't have, this is on here, Rick, I didn't add it on there. 187.8 million metric tons, slightly down from July. To give you a sense of historical, at the height of the ethanol boom and some of the crop problems we've had in the last 4 or 5 years, we had estimates down, I think the lowest one was 112 for a global corn carryout. So we're up here, and I can't remember the last time we had a 200. This is a multi-year high projection. I don't know if it's 10 years, at least 10 years high on global corn stocks. The soybean stocks number came in at 85.6, fractionally higher than July. Again, to give you a sense of where that's been, we've been down below 60 at extreme in terms of global carryout on soybeans. So globally, we're certainly looking at bigger corn and soybean numbers. The wheat number was 193. That was up about 3 million metric tons from July. Again, looking at peak drawdowns, we were looking at wheat carryouts in the 125 area globally. So, when you look at it in terms of corn, beans, wheat, any kind of coarse grain, we're definitely heading into that surplus area this year, which is something we have, every year, last 4 or 5 years, we said, if everything goes right, then we're going to have, A, we had ethanol growth to cover, and B, we didn't have one of those kind of years, where yields were just off the charts good, along with acres. So, we're going to have plenty of grain.
From a percent use standpoint, soybeans still aren't comfortable on a worldwide basis.
Well, soybean growth has been tremendous. I don't know the global stocks to use off the top of my head right now, Rick, but you've added, as compared to a few years ago, you've added 20, 25 million metric tons to the carryout projection, and demand hasn't grown that fast. So I know the stocks-to-use ratio is growing. It doesn't argue for, and the economics of the day, we're not going to see 250 corn and 650 beans anytime soon, because the cost structure has changed enough where, we're not going to see that anytime soon. It would take multiple years and, adjustments on the input side. Typically, when you jump, about every 30 years, we've talked about this, for every 30 years you jump into a new pricing range. And often you go back and test the old pricing range, but you don't stay there very long. And if you think about what was the magic number 25 years ago, I've heard it a million times, but if I get $3 for corn, I'd go crazy with it. So, does it surprise me that we're going to go down and test that $3 area again? No. Beats testing 180. But that's how free markets are supposed to work. Price is a great fertilizer, and it can be pretty discouraging as well when you need to discourage production in certain areas. And farmers now are able to be a lot more liberal in terms of what they plant and adjust their acres, and we're starting to see that.
You take a 30% drop in the price of soybeans worldwide, you don't know what that's going to impact on demand as far as.
Well, it should definitely be helpful.
Yeah.
No question about that.
So your ratio, I don't think, is going to drop on your corn and soybeans as much. People think.
The thing we have to remember, though, and kind of keep in the back of our mind, I just saw the other day, Smithfield reported record profits again. And people say, well, how can you have record profits when you're paying as much as they are for hogs? Well, we got to remember that the farm share of the pie has gotten progressively smaller with time. And, how much impact did we really see, on the grain side? Box of cereal, all that. Not a whole lot. We've seen it here over the last year or so, 18 months or so, on the meat side. We're definitely starting to see that, but the meat is a less processed product, as opposed to turning grain into meat or turning grain into booze or ethanol or what have you. It's a lot more direct, and they do get a bigger share, for better or for worse, of the pie, as opposed to the grain side. We've talked before, fuel, energy is a much more important component in terms of cost. So the fact that grain's getting a lot cheaper, I mean, are you going to see like you used a 30%, does that mean we're going to see a 30% increase in demand? Not necessarily. Not necessarily. I think price, you know, if we saw energy prices go down for the right reasons, not because of a problem, but if we saw energy prices go down, that would be as good as anything in helping stimulate demand for grain.
And it is going down.
Slowly. We can keep everyone from killing each other overseas there. So is there any more questions just about soybeans in general as it pertains to the report? And we can talk yields there if you want in this part too, because like I said, I don't try to walk them myself and guesstimate, so this would be the appropriate time to talk about soybean production.
Ours look good.
Yeah. Yeah, they look, you know, by and large, they look real good. I don't know what that means. I mean, I've seen them this tall, didn't do very well, and seen them knee high and do real well. So, you know, could the weather be better for soybeans? Ideally, yeah. I think, you know, it certainly could be better, but it could be worse too. Big picture, I'm talking everywhere that grows soybeans in the United States, it could be a lot worse. Okay, so we're all in agreement that we're going to have plenty of corn and soybeans this fall. The question is, what are we going to do with it now? One thing you need to really take away from this meeting today is that we have a real dysfunction between what beans are going to do this fall and what corn's going to do this fall. We talked a little bit earlier. I don't know what we're going to, well, I know what we're going to do with this corn crop. We're going to fill up every nook and cranny we can. You're going to see a lot of it on the ground. We don't have, in terms of trying to export it out of the country, huge portion, I've heard people say as much as 90% of the elevation space down at the Gulf is committed to soybeans for export. The Pacific Northwest has been a mess all year, a logistical mess in terms of rail. You know, Canada had this ungodly once-in-a-lifetime grain crop last year, and then we had real poor weather over the winter, you know, and they still have huge backlogs out there. So those are your two primary export markets, and right now they look to be largely shut off to the corn market over the fall. So, you know, if you're trying to ship corn down the Ohio River on a barge, I don't think that river bid's going to be worth, you know, I would not plan on taking corn to the river this fall. I think your best bids are going to be domestically, and even then, we're going to be looking at a buyer's market. The corn crop, which we'll talk about in the next section, I think there's some concern, not too late to catch up, but there's some concern right now that we're a little bit late. Some of these big crop years I've mentioned in the past, the crops come in big, but it's also coming a little bit wet because of the cool summer. So you run into that drying capacity issue on top of this potential logistical issue along the river system and the rail system. Typically, this is the meeting we really start talking about basis and saying, okay, we've walked fields now, let's start looking at setting basis on fall delivery needs. Well, we made that decision last month because of some of the logistical concerns. You know, we thought the corn crop was going to be pretty good. We didn't know exactly what it was going to be, but we knew the logistics were going to be bad. It would not surprise me, guys, to see 40, 50 under, fairly common for fall delivered corn in the eastern corn belt. Maybe even higher than that in the western, or worse than that, I should say, in the western corn belt. Like I said, the northern plains is already pathetic in terms of some of the basis levels those guys are seeing. When you see that kind of a year, the market also has a tendency to put carry in the market, which is premiums in the back months. And for those of you that have bins, this is going to be one of those years where bins pay off big. For example, and we'll use easy numbers. I'm not great at math, but if you take 350 corn at 50 under, just to keep it simple, you're looking at $3 cash bid. At that same time, we're probably by fall going to be looking at a 30-cent, maybe 32-cent carry from December futures to July futures. So at that same time, let's use 30 to keep it easy. You could sell 380 July futures at that time. One of the upside to lower prices is it has a tendency to support basis once the crop's tucked away. I think you're going to see opportunities throughout the year to see 10 under to option price the spot market as we get close to delivery against that contract. So let's say mid-June, could you see a 10 under to even bid against the July? Yeah, I think you could. At even, that's 380. Now you tell me at 380 for your cash versus $3 for a fall bid, you know, that's the difference between making some money and losing money. You know, and so in carry years, playing that basis and earning that carry. Now, of course, the only way you earn that carry is by locking those futures in by some form or fashion. Now, it doesn't necessarily mean you have to sell 380 July futures. Last year, if you guys recall, shortly before or after harvest, I don't remember which, we put on like a 430 put and short a $5 call because everybody in the room said they'd sell $5 corn. It had to be after harvest. Now that I think about it, because they wouldn't have said that before harvest. But and we did see a rally back over $5 by summer. And if you recall, nearby corn was trading around 430, and that's why when we did the July put, which, you know, obviously July corn was trading higher than that. I think it was 450 and some change. We were able to do that for not a lot of cost, guaranteed us we wouldn't take any worse than what we were getting out of the field, and hopefully we could get up to $5 for corn. And that's kind of what happened. And I see strategies like that available this year by looking at trapping that carry in the market, if not with futures, then with some kind of option play. But to sit there and not do anything, what has a tendency to happen in big carry years is if you want to use 350 at this level for December, and let's say, you know, 363 for March and 370 something for May, 380 for July, well, as that nearby contract slides off, what has a tendency to happen is everything goes like this. And that carry just kind of melts away. So that corn that you put in the bin when July was at 380, you know, you could very easily see July back at 350 by the time July's the spot month again. So you let the carry get away from you. Yes, you earn the basis appreciation, which is good. That's half the equation. But you let the carry get away from you. So that's one thing we're going to do on bin corn this year is we're going to take strategies where we don't just put bin or corn in a bin with nothing for a floor underneath it. I'd like to have a floor and maybe a ceiling. You know, if we're willing to accept, you know, based off the crop we have, if there's a point where a guy goes, look, I don't care if it goes back above 4 1/4 and I have 220 bushel corn, I'll take the 4 1/4. You know, I just don't care at that point. So, you know, we'll look at strategies like that, and then open-ended ones where you can get anything you can get. You know, kind of offer some alternatives. But to throw corn in a bin this fall and not have it protected in some form or fashion is likely to be a big mistake. So if you haven't set your basis, and you may, you know, based on what we talk about in yields and as you walk your own fields, you know, we always talk about 100%. Well, you know, you may have to refigure 100% as you get some further idea of the size of the crop that's out in the field. The other thing I would highly, highly, highly encourage you to do, once you do start harvest and your confidence grows in the size of the crop you have out there, please go to the elevator first, fill your bins last, because you're asking for trouble. You know, it's human nature. Guys go out there, it's easy, they throw it in the bin, and then, you know, get the blinders on and harvest, and the next thing you know, they say, well, what am I going to do with the rest of this corn? Well, everybody kind of reaches that, what am I going to do with the rest of this corn thing at about the same time, and then it's like shooting fish in a barrel from the buyer's side. You know, if yields are high enough, guys just go, here, take it off my hands. You know, I don't want to pay storage, just get rid of it. And that's what, you know, leads to even further basis erosion during that gut slot time frame. Not to mention it potentially slowing your operation down as you're waiting for elevators to make, you know, get their drying space back up, you know, where they have room for wet corn. So, you know, I'm not asking you to do it today, to go out and go crazy and say, okay, but as you get into harvest and you're pretty confident in what your yields are, make sure you're going with that surplus first, not last, or you're in for Maybe, you know, it's going to be a long fall in terms of harvesting, so it'd be a lot longer if you're waiting in the line somewhere. And then being offered a poor price potentially on top of that. So I put a chart there, guys, on the soybean side. What that chart is that is the commercial side of the soybean market. And as you can see, that red line there is the number of contracts that they're typically short. And now I could print that out almost any year. Why are commercials short? Because they buy grain from the farmer. When they buy that grain in as hedgers, they sell it on the board. So traditionally, for most of the year, commercials are going to be pretty sizable shorts. Well, one of the things I've heard almost universally this year is that farmers are undersold. Okay, now I know, you know, we're in a marketing group, and sometimes that's a little bit of a bubble in terms of what we're doing versus what other people are doing. But if you don't believe me, ask somebody in the commercial grain business how much corn and soybeans that they bought ahead this year. Typically, you buy about a third of the crop ahead, you buy about a third of it at harvest, and you kind of buy about a third of it after harvest, more or less. A lot of guys I talk to say most farmers they know have little to zero corn sold. And they're not much better on the soybean side. You know, we're coming down off this 5-year plateau where we went up, had a real good run of things in terms of the grain producers side. And you know, a lot of people who were eager to sell $3 corn on the way up, even sell multiple years, are the same people now who dug their heels in and said, I'm not going to do that. I can't sell corn that cheap. So they're kind of repeating the mistake they made on the way up by selling too much too early, and now they didn't sell enough too late. But what that chart shows is the commercials are actually long soybeans. And that's important for two reasons. Yes, they're underbought in terms of what they bought off the farmer. But when they're long, it means that they've sold more than they've bought. And that's very unusual for this time of year. But when you marry that up with what we're talking about in terms of elevation space down at the Gulf, it's going to be a very active movement period for soybeans this fall, which would tend to support soybean basis. Now, I'm not going to sit here and tell you that soybean basis is going to be great, but versus corn basis, it could be considerably better. Considerably better. Then when you start looking at the carry in the market, while the corn and soybean carry from fall out to next July are fairly similar right now, I think you're going to see them, you know, corn maybe get a little wider, beans get a little narrower in order to force some movement there at harvest to fill these obligations that the exporters and the processors have. So, you know, if in a perfect world logistically, if all your space could be used for corn or beans, I wouldn't store any beans. I'd be full of corn before I thought about storing any beans. Is it a great basis to price for fall? No, it's not great, but it's not terrible. You know, it's not what corn might be this fall, and you're going to get, you know, even if corn and soybean carry ends up being the same, it's a lot cheaper to carry corn than it is soybeans. So I would stuff everything you have with corn at the expense of beans this year and go ahead and give it to them, the soybeans. Now obviously, you know, there's going to be some early shipment premiums, more so on the bean side than the corn side. I can't tell you, you know, where you guys are at in terms of capturing some of that, if you planted early beans, what have you. What I can remind you of is those premiums can and do change by the hour. So don't go home on a Friday saying, I'm going to cut beans Monday and wait till Monday to price them. Because things could have changed substantially by then. You know, you got to take a little bit of measured risk in terms of the weather and you know, breakdowns and what have you. And that's one of the things, if you do commit to that, I always think you need to ask your buyer, well, what's the penalty? You know, are you just going to go at the market? Are you going to tack something else on if I can't get them into you? How, you know, what happens if I can't get them into you? And get that in writing. But there should be some pretty good early shipment bids for beans. You're going to see a lot of, you know, price resistance for physically pricing them, but I think in terms of basis-wise, there's going to be some good basis bids for early shipment beans. And even if there aren't, again, I think you're going to be much better off getting rid of your beans at the expense of corn if you have storage issues. You know, obviously, if you can store everything, then you don't have this problem. But if you can't, I wouldn't store any beans. I think you're going to be in a much better position for fall bids for beans than you're going to look at corn. So any questions on basis, fall delivery, anything along those lines? Probably looking, guys, when you start looking at some of the deferred bean bids, there's already some pretty good pop out there in that December time frame. You know me, I love to move those beans in December. It just works great in terms of carry or lack of carry. It's great for paying some bills that time of year. So, you know, we probably will. If we do store beans, we're probably looking at moving them there sometime in December again this year.
Jim, if you have storage, it only works for beans. I assume you want to put beans away.
Oh yeah, if you only have bean storage, it pays today when you look at an October bid versus a December bid, okay? But if you're in a pinch where you can, you know, you can do either one, then you gotta store the corn and forget about the beans. They're gonna have to go. Other questions regarding fall bids? Okay. We're going to talk a little bit about pricing going forward from the future side then. I've said for some time and continue to believe that if you take the ultimate lows over the next 12 months, I don't think they're going to be set this fall. I think there's still enough, you know, of a carryover effect from the last previous years, enough resistance from the farmer. You know, 350 futures on corn at a 50 under basis. You're going to see guys trying all kinds of things to not price against that. You know, a cash bid with a 2 in front of it, for example. I think it's going to take, you know, proof about the size of this year's crop. Then you're going to have some risk built into, okay, what do the South Americans do this year? But once you start answering those questions, and let's say, you know, by next February, we'll have a pretty good idea. Do the South Americans have a trend crop, a better than trend, worse than trend? You know, we'll have an idea. We won't have it narrowed down completely, but we'll have an idea. We'll start to get an idea on any acreage shifts here in the United States. February is crop insurance month, so people will be making some decisions in that time frame if they haven't made them already. You know, have to get next year's crop planted. But, you know, you could be sitting here this time, maybe even earlier than this time next year, and if things look trend or better, you know, we could be looking up at today's prices conceivably, you know, and saying, you know, as much as it hurts to say for a grain producer, you know, I've had guys say, well, I can't make any money there, and I said, did you farm back in the 80s and 90s and back when, you know, the only money you made came from Uncle Sam, basically, at that point. It was very difficult to make money, and that's, you know, unfortunately a harsh reality of how you balance supply and demand. So I think we're getting close for now, for fall. I think that 350 area, again, is going to be pretty tough sledding to go below there at this time of year. Now, if we just come in and we find out the yields are off the chart good, then that could be another thing altogether. And I kind of jumped this a little bit. We didn't talk about yields yet. I skipped that. So we're going to go back to talk about yields before we go any further. I have done preliminary yield checks. When I say preliminary, I mean I'm going to go out again after I get, by the way, I'm going to be in Boston Thursday and Friday, so some of you guys that persistently send me orders via email, which I hate because I don't do that. I'm going to be gone Thursday, Friday, but be doing some again next week. And then the week following, I've got some scheduled as well. And I like to spread them out after the report so you can kind of see how the crop's maturing, if there's been any changes from the last time you were out. But guys, right now, I got to be honest with you, I mean, I've never seen anything like this. Both in terms of overall yield and in terms of consistency in the areas I've been in. Now, granted, I have not been. If you want to take east of 31 and north of 74 and even further, probably a little further north than that, you know, there's going to be some variability up there. I saw it all spring. It's going to be different. But you have to understand that that northeastern quarter, if you will, of Indiana is the exception, not the rule. That's why Indiana's lower rated than the crops out west. I think where I've been so far probably resembles more what we see to the west of us. But Benton County, I went around 240 for an average. I think the best I've ever seen is 210. So it wasn't like it was just a little better. It's a lot better than anything I've ever seen. In fact, the 2 days I went out, I had one check that went 188 up there and one that went 178 here. The lowest yields in those two geographic areas after that were like 218 and 229, the lowest. And both saw yields as high, individual checks as high as 272. That's using 85,000 kernels per bushel. You know, last year, according to the seed guys, one of the reasons yields exceeded people's expectations, and even people like myself that went out and checked, is I heard low to mid 70s for thousands of kernels per bushel was more common last year. So I'm using 85. I switched several years ago from 90, trying to be conservative, and now we're down to 85. And when you see those kind of yields, you know, I think I've seen 2 checks where I've walked into fields that were under 30,000 ears. I've seen one check that had one double-eared stalk. I know you hear that talk all the time, go, oh, double-eared, this. Somebody sent something out about 3 weeks ago over in Illinois about, oh, all my corn has double ears, and I'm like, you haven't even been in your field. You've been walking in rows. 94, we had the best crop up to that time I ever saw, and I saw a stalk with 4 ears on it. I was out walking fields for elevator, and I pulled that thing up, put it in the back of the pickup, and they go, how'd the corn crop go? I said, it'll look like this. You know, and we see some of that this year, you know, out on those corners and on the ends. But uniformity, I mean, so uniform. Row counts, 18s, 20s out there, even some, I've seen some 22s around. Very few 14s, you know, a few more 16s, but probably an average of 2 more rows per ear than what we've seen last couple years. Length is good. I mean, a lot of times when you see those girthy ears, they're not as long. You know, I've seen 16 by 45, 46s, and that's only the fill. That's counting some tip back where it isn't going to fill much out there. You know, I've seen 18 and 20s that'll go 38 to 40 long. And when you take that, I'd say my average ear count so far, I haven't put it in the spreadsheet yet, but I'd say my average ear count's got to be 32.5 to 33.5 thousand per acre, and just as consistent as can be. So, you know, don't shoot the messenger if that's something you don't. But in this day and age, when I first started walking fields in 1991, nobody did it. I did it out of sheer necessity because I didn't want to be overwhelmed with corn in the fall. I didn't know how many trains we needed to stay open. Nowadays, there's a tour goes out every other day, I think. I saw one over in McLean County, Illinois, which is about 60 miles west of us. Big corn county, one of the big ones in Illinois. Some co-op went out and they averaged 243 on their tour. And our soil is very similar up in Benton County to theirs. So I saw that before I went out even. So could I be high? I don't think I am. In fact, you guys know me, I have a tendency to come in a little low normally. Are there things that could change that between now and then? You know, like I said, there are a few areas in the Midwest, and unfortunately some of you guys are in that area, that have been drier than desired. Probably the biggest risk going forward here is maturity risk, or lack thereof. I did only see one check that was just starting to dent. Probably saw maybe 25% of the check so far that was getting, it was in the dough, getting close to dent, but not denting yet. And then, you know, the other 60, 70% was anywhere between still pollinating, which I don't check fields that are still pollinating, all the way to just in the blister or milk stage. So, you know, we've got a ways to go to get this crop finished. Now, you know, the forecasts I've seen over the next in the 6 and 15-day time frame, talking about bringing the temperatures up to more seasonal levels, not hot, but, you know, 85, 87 for daily highs. And I would argue, all in all, that's a good thing, especially for the corn crop and probably for the bean crop as well. If you're in a dry area, obviously you don't feel that way, but again, you're in the minority if that's the case. You know, I don't know what to tell you guys. I've never seen anything like it. You know, we've talked for the last 4 or 5 years. What happens if we do get a year that is largely stress-free? What could we see? Well, this is it. And we're going to see it this year. And, you know, which is why, like I said, please, 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 when you get out in your fields and if things are, if you realize you're gonna have a storage problem, take care of it right away. Start hauling before everybody else beats you to it. But there's gonna be a corn I think there are a lot of factors lined up against the corn market from the logistics side that just make this fall a mess. You know, I'm hoping this crop speeds up a little bit and dries down so the dryers don't limit what we can do. That's where you really have your messes, when everybody's out of drying space. Hopefully there won't be a lot of that and we're not having to take a lot of moisture out of it. Plant health, excellent. And I saw very, very little disease or bug pressure. I did start to see, for the first time in several years, I'm starting to see rootworm beetles again. Didn't see any damage, but I saw the beetles in several fields. In fact, there were some guys spraying up in Benton County area, which I didn't know about. I haven't seen any damage, but they're out there again. Didn't see one Japanese beetle, not one. You know, we went through a period of time where we saw a lot of those. Just very little insect pressure, very little disease pressure. You know, what moisture we have in these temperatures is just going to be putting it right into the ear this year. So if anything on these yield checks, you know, I'm a little fearful that, you know, I could potentially be a little bit low. As ludicrous as that sounds, I could be a little bit low.
Jim?
Yeah.
Back to Nova beans.
Okay.
Where do you think you might see the low coming in during harvest?
This year's?
Yeah, this year.
You know, because of the demand side, Dave, and I think this demand thing is going to be important, both psychologically and actually logistically. I don't think, based off the U.S. crop, and because people's lack of confidence over the USDA and their demand projections, I would be surprised this fall if you trade much below $10. I'd be surprised. I don't, you know, and we're sitting here at 1060. Is there more premium in the bean market than the corn market from a bottom standpoint? Yes, I believe that to be true. And that's part of what we saw yesterday, I think. And the further we get into August and the safer the bean crop gets, you're probably going to see bean versus corn pressure. Other questions? Okay. Kind of skipping back then again, talking about prices going forward. You have to understand that over the winter, the function of the market is going to, for corn, is going to be able to keep old crop prices cheap enough to spur demand, but you got to keep enough of a bid under the new crop to keep people from abandoning corn on a large scale. You know, we can do with fewer corn acres, but not a whole lot fewer corn acres. And when you look at profitability, there's going to be some pressure to start dropping corn acres, particularly in the marginal areas. You flip that over on the soybean side, the soybean market, let's say for the balance of 2014, you know, is going to enjoy some pretty good demand. Going to see better logistics. But if you look at it past there, as we get into South America's dominant time frame and forward, you know, with average crops are better, we know they're going to plant more acres down there. With average crops are better, you know, the function of the soybean market from, say, early spring on is going to be to discourage on the soybean side. So, you know, I think this ratio between corn and beans is going to start narrowing, particularly in the new crop months, you know, from here all the way out till summer of next year. Neither one looks super attractive in terms of profitability, but I don't think that's anything you guys are shocked to hear from me today. I do want to look at, you know, we've been pretty aggressive on old crop, which is the crop out in the field, and we need to start looking at that new crop as well, and I will. I just don't like to do a whole bunch at the same time. Any little bounce from here, people say, what do you think of the markets this year? Have you ever seen the game Whack-A-Mole? It's what it's going to be like. Market pops up a little, you're going to have about 20 farmers with hammers, you know, trying to price against that bounce in the market because of the fact, A, they got a lot of it, and B, a lot of it's not sold. So this is the year where you want to sell rallies. Any year you see rallies. Just in big crop years, they don't last very long, they don't go very far. Fortunately, we're in a position where we're fairly well positioned for the crop in the field. I would like to push up to 100% on the new crop beans in the not too distant future. Currently, we're 25% in the cash HTA market, and the other 50% should be on paper. So I'm not afraid to go out there and book 25% in the cash HTA side and leave the 50% on paper. We're going to have to do something by August 22nd on some of these short dateds. And again, I could sit here today and tell you this is what I'm going to do today, but in this time of year, 10 days is a long time. It's not that far, but it's a long time in terms of what people's perceptions are of the crop. We'll get a chance to look at the Pro Farmer Tour. That has grown into quite gets a lot of publicity, and people are going to use that to try to validate well, is the USDA being conservative, or is that what they're seeing out there? I think if you walk enough fields this year, you're going to be pretty impressed with what you see out there. And I don't look for that tour to bring anything that's going to be bearish to the market. We could, people say we could see an early frost. If you guys recall, the anticipation of frost is bullish. Other than a freakishly early frost, freakishly meaning early September, maybe even up to mid-September. All frost typically does is create a lot of low-quality grain that has to be marked down and moved. And that's not bullish long-term when you force grain on the market in poor condition. Now, if it destroys it where it's unusable and it comes early enough, that's a different kettle of fish, but you can count how that happens not very often a century. You see something like that that's widespread enough to cause that big of a market disruption. So, there's always something down the pike that you don't know about. But if all things being equal here going forward, we're blessed to have a good crop this year, but we're going to have some challenges in marketing it. Open the floor to any question whatsoever on grain. I let Jeff and Gordon wean pigs today, and now I got nobody to ask questions. These two guys are getting tired of it over here, and nobody else speak up. So,
Right. Where you gonna roll it? Where you gonna roll your hedges out to? Where, how, or when, or?
Well, I mean, obviously it depends on, when you say roll hedges, that's bin space. So, anybody with bins, Rick, you can always, when you're talking about carry, there's covering your costs, and then there's opportunity costs. Okay, I think we're going to see gut slot harvest. You're going to see the corn carry get about as wide as it's going to get. If you roll to July, that doesn't mean you have to carry the corn to July. Okay, all it means is you're locking in the ability to carry it at a good profit. If the market conditions change, and I'm not going to go into why they would change, but if for some reason all of a sudden the market says, gosh, we got to have corn, and those spreads narrow, that's a good thing because you locked in a wider carry. It also means basis has a tendency to narrow, which is a good thing. And you can always go forward. If you sit there and you say, okay, let's say somebody's paying even to March, and there's a 12-cent carry to July, well, then you're going to, if you deliver, you're going to get 12 under the July instead of even to March. And if they're really pushing for it, odds are those spreads have come in, and you sold in effect, by rolling, you're selling that East March spread at 30, 32 cents. And if you buy it in at 26, 27, you've made a nickel. But more importantly, you've locked in that return on your storage. And that's, it could go to 35, and you roll it at 32. You've given up 3 cents opportunity cost, but you still got a hell of a return for your space. But probably in the harvest time frame, Rick, that's typically where spreads bottom, particularly in big years, when they're just sitting here choked and forced to throw it on the ground. That's when the market opens up those carries to their widest point, typically. Obviously, we won't be putting beans out against the July because I have no intention of carrying that long. But on the corn side, yeah, we'll probably roll those at harvest. Got till, for anything D-space, we got to the end of November. Oh, one thing before we break I wanted to talk about, because now we're starting to see it in application as opposed to theory, these short-dated options. I like them. I think they're the best thing that's been offered to you guys as a marketing tool in a long, long time. You know, we were able the other day to get 360 December corn futures hedged with a short-dated option for 4 cents when the market was trading at 370, 371. You know, if you'd looked at the December that day, I think they were trading 10, 12 at the same time. Now we've seen a report that suggests that some of the downside's been eliminated in the market, certainly over the next couple weeks. And, you know, we can walk away from that thing, keeping a lot of our powder still dry for whatever the future brings. You know, it's not just that, guys. It's one of those where you're not married to them. You know, you put a put on at $4 and you know, early in the season, and it goes to $5, and you're looking down at that $4 put, and you're looking out your window at your crop and saying, well, that thing's useless. But I'm married to it now because I paid 30-something cents for it, when I could have bought a May short-dated crop for a quarter of that. And now I can entertain locking in, you know, that put $1 higher than where I put that one on. So I really like them. You don't take the spread risk on. In the past, if you wanted to trade time and trade in smaller time increments, you had to take old crop, new crop spread risk on. And as we've seen, particularly on soybeans of late, that spread risk will kill you. And we're seeing the world's being right in your thinking and not making money on it. You know, losing money, in fact. So I hope you like them. We're going to use them a lot. In fact, our first new crop sales, I anticipate using May short-dateds. The short-dateds for the corn and grain are May, July, September, or corn and beans, excuse me. For wheat, any wheat growers out there, it's Dece, March, May. We didn't spend a lot of time on wheat, but if any of you guys are planting wheat, I would strongly suggest we talk in the not-too-distant future about looking at some December short-dateds, not spend a lot of money, but at least lock in a floor out through the end of November. You know, obviously by then you'll have committed to planting wheat or not planting wheat. I didn't look here recently, but we've been trading July 15 over $6, which is a relatively fair return on your wheat. So, but I like them. I think it's a great risk management tool. Hopefully it allows us to be more aggressive with less cost. And that's important. You know, in this kind of environment that we're moving into, it's important, again, that we become more aggressive in our forward pricing, and yet we don't become option poor in the process. So, anyway, any other questions? Or anybody have any comments about those, Bill?
Yeah, recently, maybe 4 or 5 days ago, you put a letter out. There was a discussion of the new farm bill.
Right. Yeah.
Any recommendations?
I'm like you guys. I'm just learning. You know,
Okay.
learning about it. You know, it hasn't been something for discussion the last several years because you know, it was an old farm bill and we weren't using that many. Certainly, we weren't using the marketing aspects of it. Just kind of in my perusing the discussion, it looks like we're entering levels, if we're not there already, where we might see some of those, I don't know what they call them now, but they used to be called counter-cyclicals. I don't know what they're called now, but which is a good thing, you know, in terms of getting some extra revenue. They've also lowered the ceilings on, you know, where you cap out at. So, you know, this time around, some more guys might get caught in a cap if things get bad enough. Now, you know, the other thing to remember is, you know, from a revenue standpoint, yields are going to mask some of the problems this year, but that may not be the case next year if we have more of an average crop as opposed to above average crop. But it's still new enough. I don't feel comfortable sitting here holding an in-depth discussion about it yet, other than to say there's a lot to learn. Other questions? All right, guys, we'll definitely have a September meeting. It'll be our last meeting before harvest and before I go fishing, so I'll let you know the date. It'll be right after the crop
I know
report.
this is a small sampling in your group, but what are you guys hearing about guys thinking about planting wheat this fall that hadn't planted much wheat in the past? See much shifting going on or not? No? Okay.
Pioneer guy told me we've got a customer in Ohio who's going 25% wheat next year.
Well, if you have the ability to double crop, I don't know why anybody double crop wheat would even grow any corn, even if you need corn. I'd tell you to double crop wheat and beans and buy the corn. Seriously. You know, I would seriously entertain that if you could do it. You know, you guys are kind of a marginal area, and, you know, up north, we can't even do it. I mean, it's just, most guys usually get next to nothing off their beans, but, you know, those areas south of the river that can do it, makes a lot of economic sense. So, you
Better
know,
sell the wheat.
yeah, and you better sell the wheat. Anytime you change your rotation, we've had this discussion a million times, if you're gonna change your rotation, you take those acres where the rotation's changing and do something about it. There's nothing worse than losing the agronomic benefit of a rotation and not having the economic benefit when you go to price it. Worst feeling in the world. I always tell people you ought to be 100% hedged, even, you know, using an option or something like that. You ought to have that revenue 100% trapped when you're making big acreage shifts.
Well, the market screams plant wheat, plant beans, and don't plant corn today.
Today, you're exactly right. Exactly. And I think people are gonna respond. I think the spring wheat guys up there,
But so many people don't sell it when they
You're right.
make that decision.
you're gonna see a mass exodus, I think, up in the Dakotas, away from corn and towards spring wheat again. And it just doesn't work anymore up there.
Hmm?
All right, guys, thanks for coming.